All right. Well, good day, everyone. We want to welcome you to our next installment of the PrimePay Broker Concierge webinar series here in 2019. Our title for today's webinar is Voluntary Benefits Beware. Right out of a horror movie or something, right? I got you all scared, right? No. Don't be scared, all right? We're going to make sure that by the end of this webinar here today, you're going to be informed. You're not going to be scared, certainly, of that subject. Hello, everyone. My name is Steve Jackson. I am the Senior Vice President of Broker Concierge here at PrimePay, and we want to just welcome you to today's webinar. And thank you for taking time out of your busy schedules to sit with us today on this very important topic. For those of you who have not participated in our webinars before, we are trying to take each month a specific topic. It could be a sales strategy. It could be a specific piece of regulatory guidance, a plan design, several different things. And we know that you ultimately, as a benefits broker, you are able to drive value to your clients when you take a complex or a complicated subject and you're able to turn it into or communicate it in a practical way, right? That's what they need. Clients don't know what they don't know, and so it's up to you in many instances to be able to drive practical application to specific content. And that is what we want to do today, right? There is a growth spurt, certainly with voluntary benefits and worksite benefits. And we want to talk today about some of these key issues that you need to consider as more and more employers adopt these types of benefits. So today, beware does not mean be scared or run away or do not sell any voluntary benefits or worksite benefits. Nope, couldn't be farther from what we want to try to accomplish. But there are some specific items that we do want to cover that you're going to want to communicate here with your clients. Now, just some logistics real quick. Many of you may have some questions as I go through the webinar today. We are taking your questions. I just probably will not be able to address them specifically during the webinar today. So what I'd ask you to do is go into the GoToMeeting menu bar, go into the question box, and at any time throughout my webinar, go ahead and type in your question. I will have someone from my team connect with you directly after the webinar and answer your question directly, okay? So as I go through some of these things, I am sure to draw up some questions. So I want you to go ahead and type out your questions so you don't forget it, and then we can address it with you. One of the top questions that we do get is, are we recording this, or can I have a recording? And we are and do, okay? So you don't have to type that question. We record this. This webinar is being recorded. We post all of our Broker Concierge webinars to our public YouTube channel, which is Broker Concierge. And so just wait for a couple days and here after the webinar, and this webinar recording will be posted. All right? So I'll wrap up here at the end. We've got a couple key takeaways that we'll be able to give you here as follow-up to our webinar today. So please be ready to go ahead and type in your question, and we will go ahead and get started. All right. So as always, Steve Jackson comes prepared. He's going to come ready to give content. And so we are trying to pack information, a lot of great information for you in a shorter amount of time. So we're trying to hold these in 30-minute kind of bites. Well, and some on my team would say it's really more like 40 minutes, Steve. You know, come on. But we're going to try to keep it to around a 30-minute take. But we've got these key agenda items to discuss with you. As I mentioned in our title, we're talking about voluntary benefits, but today, and voluntary benefits are something that I think for most of you that are on here today probably have a good understanding about those specific products. But there's an increase in adoption going on right now in worksite benefits. And we really want to be able to draw a comparison of the specific compliance types of issues that can come, okay, in regard to worksite products and voluntary. All right. So we're going to hone in on just what are we talking about, right? So build a foundation. That's what we normally do here. And then we're going to talk specific then to ERISA, COBRA, Section 125, right? I want you to be able to walk away from the webinar today really having a solid understanding as to what can or cannot be done or accomplished by offering and adopting these types of products with your employers, certainly prospects and clients. And then I also want to touch on a little spotlight, so almost a bonus, some bonus tips here for you, as it also relates specifically to employee assistance programs, wellness, and telemedicine. All right. So go ahead as I go through these sections. You can actually type in your question there at any time. Now, as I get started, I do want to be able to lay a foundation for what am I talking about. Let's get some credence here to the actual terminology that we all use, but we all may be using them maybe possibly a little different. So I want to build a foundation here for the webinar today. So there's two different types of words here, right? We have voluntary, okay, voluntary plans, and then we have worksite, all right, worksite plans, all right. So let's get a good definition here of what these mean. Under voluntary plans, what am I talking about? These are group benefit plans. These are held in the name of the employer, meaning that they're employer-sponsored group benefit plans, all right? So again, held in the name of the employer that are paid 100% by the employee, right? So you might go, Steve, yeah, get it, voluntary. That's why it says voluntary, right? But an underlying issue here, right, is just it's held in the name of the employer. That's what I want you to get out of that voluntary plan definition. And so examples are the standard products that you sell, right, offer, employers adopt, day in and day out, right? 100% employee paid dental, vision, term life insurance, AD&D, right? Those types of policies that are considered more of those group-based or employer-sponsored policies. Then you have worksite plans. These are, of course, individual policies. They're held in the name of the employee and then generally, right, of course, would be paid 100% by the employee. So examples of these products, right, that you guys probably are familiar with, you've got individual accident, hospital indemnity, critical illness, cancer benefits. I mean, there's a plethora of more types of worksite benefit plans or products that are out there today. But this slide is very important, right? Because as you're talking with employers, you are adopting, or you are, I should say, implementing a series or set of voluntary plans, right, for an employer. That's very common, right? Dental, vision, term life, all day long, right? But then you have these individual policies, and this is hit or miss to some degree with many employers. And so we want to kind of dive into some of this aspect of, all right, so what is this growth? What's driving worksite? Where do we see worksite even taking hold more? Because I want you to have an understanding here of what the compliance aspects are as you adopt more of these worksite products with more of your clients. So again, what's driving the adoption? Some of this here is going to be no-brainers, okay? When you look at high deductible health plans, if you look at any recent study, right, in 2018 or 2019, from Kaiser Family Foundation to SHRM to Willis to whatever it may be, right, out-of-pocket medical expenses, according to Kaiser, over the last 10 years, deductibles have increased over 212% over the last decade, right? So it's no surprise that out-of-pocket expenses for employees, for individuals, right, you and me, our costs are going up as it relates for us having services rendered or incurring care. So having worksite products that are specific, right, to a critical illness or accident or some other indemnification, it makes a ton of sense, right? It makes a ton of sense too with the second bullet, where we are having a much more diverse workforce. Employers, many employers offer one medical plan, right? It may be a great medical plan, but you and I know that for all of the employees, right, it's not going to be a perfect match for all the employees of the company. Some are going to win and some are going to lose from that one medical plan. And so worksite benefits are a way to be able to offer a more comprehensive benefit program to this more diverse workforce and the needs of that diverse workforce. So talking about from millennials, right, the young to the old, to the married to the single, right? I mean, it's all these different variables that impact, which is causing the rise of these worksite products. We also are in one of the tightest labor markets. We've talked about that before in other webinars. I mean, and unemployment rates at an all-time low. So the ability for an employer to be able to attract and retain talent, I'm telling you, like never before, they have to be committed to expanding their benefit offering, right? So again, the rise of worksite is becoming popular. And then, right, technology. Guys, think about the technology that you as an agency are adopting for the benefit of your clients, but think about your clients, those who are adopting specific pieces and parts of technology, maybe in this case, namely HR and benefit admin, right, where they're adopting the technology and being able to drive the adoption of worksite products in a new and better and clear way, right, through the use of technology. So all of these four, you probably can name 2 or 3 or 10 others, right? But these four are ultimately some of the top ones that are driving the adoption of worksite benefits. Thought I'd bring some surveys to you because this is great information to have. I think as you are prospecting or talking to your clients, it's good to be able, this is great, valuable information, right? So in the Willis Towers Watson 2018 Emerging Trends study, comes out every year, to the right there, right? So the quote, 92% of U.S. employers believe voluntary benefits and services will be important to their employee value proposition over the next 3 to 5 years, right? So 9 out of 10 employers that they surveyed said voluntary benefits or the worksite benefits that are being provided are absolutely going to enhance the overall benefit program to my employees, right? So they see value in that offering. And then they break that down into, well, what are the employers actually adopting, right? So if we start there from the bottom, right, the number one worksite benefit product is critical illness. Then you've got identity theft, pet insurance, that round out the top 3, right? Wow, pet insurance, right? Man, yes, it's becoming really popular. But look at those last 2, the top ones on the list. These are growing at a very rapid pace. And it's student loan repayment, right? Again, a diverse workforce is telling an employer something, right? It's telling the employer, hey, I'm coming out of college. I got a lot of debt, and I need to find ways, figure out ways. If you can help me, employer, wow, I'm going to be attracted to you. I may stay with you a long time because of that particular benefit. So I found that very interesting, and we continue to see more and more push to the student loan repayment sector in the worksite benefit group. Also wanted to showcase this locked-in study that just came out here for 2019. These are worksite benefits, either those employers offering or considering worksite benefits, right? So in the brown there, it's basically saying that a little more than 65% of employers are considering accident insurance. But they also say about, call it 58% of those employers already offer accident insurance. So in each of these cases, these top 4, right, which mimic the top 4 on the Willis Towers Watson study, in essence, you look at these and you say not only are a large amount of employers adopting these benefits, and they're already offering it, but probably, well, not quite double, right? But a large majority of these employers are also considering this. So what a welcome opportunity, right? That means that you are going to have more and more conversations with your employers, okay, on an ongoing basis, period. You're going to have to talk about these specific things, all right? So why again, I found this kind of interesting as far as worksite and the ability for these worksite products to meet the various employees' needs, right? Everybody's a little different. And so again, I found this interesting in our research. So it says here at the top line here, so 96% of employers understand that competitive benefits are crucial to attract and retain talent. All right? So read that, right? So 9.6 out of 10 employers, right? So virtually all employers get it. If I offer a more competitive benefit package that is going to be very indicative of being able to attract and retain that specific talent, right? But I found it kind of interesting. Let's go down to that middle section. Now, only 33% of those employers consider the diverse needs of their workforce in designing benefit plans. So think about your own groups, right? The employers that you work with. So basically it's saying all your employers get it. They know they need to expand their benefit offering. But only a third of them are actually considering it. They're actually doing things necessary to figure out, to determine, well, what are the various diverse needs of my workforce so that I can design a plan that would be beneficial to them. And then the last kind of picture here or statement then is only 12% of employers, right? So that's 12 out of 100, okay? I mean, if we really start to put it into perspective, 12% of employers who actually tailor their benefits plan messages to segments of their target audience, right? And that's the use of, that's employers who are adopting technology, maybe in Ben Admin, where they have the ability to more easily be able to communicate or display these specific worksite or voluntary benefit needs, right? So what this is all telling me here is that employers get it, but they're going to need to get some insight from you, right? And it's going to need, you're going to need to talk about this more and more and more. So I'll fill you here in on certainly some key advantages, right, of Worksite. We're going to dive now into some compliance aspects. So the advantages, right? What advantages are, and you guys might already have this playlist already set, but it's going to fill the gaps, right, for high deductible health plans. Those out-of-pocket, areas. So deductibles, co-insurance, could cover, right, specific types of illness or conditions, right? I mean, you guys know those specific policies. What it also provides for as an advantage is low-cost coverage. You guys get it. Employee population certainly can help more with the cost of the coverage, but generally these worksite products are inexpensive, right? Some are more costly, we get it, but a lot of it is offering a low-cost coverage. The third bullet there, pre-tax premiums, right? I think all of you in various stages of your discussion with your client, this question is going to come up. Well, can we apply pre-tax deductions to these premiums, or should it be post-tax? That's a big compliance item. We're going to want to address that with you here in just shortly. Payroll deductions, right? Doing it through payroll, it's easier to pay. Now, an employer might say, well, that's an advantage to the employee. Very much so, but if I've got to reconcile this darn invoice from month to month, right? So, but there's advantages around that. There's opportunities to make adjustments there as well. But payroll deducted from an employee basis, oh, how wonderful is that? Just take that right out of my paycheck and it's done, paid for, it makes it easy. And then absolutely with Worksite, the benefit, generally it's going to offer portability. It gives the ability for that employee, even when they transition from that employer, that they have the ability to continue to have that benefit well beyond just that particular employer. So we brought up some of the foundational aspects here of Worksite. We see that it's gaining in popularity. As it gains in popularity, you need to understand more of the compliance concerns that are centered around these particular products. So, some questions that we have to ask, and we're going to address here in the following slides. Are Worksite products subject to ERISA? Think about your answer right now. What would you say? What would be your answer, yes or no? I should have done a survey actually right now. That would have been very, very good. I need to think ahead there a little bit more. Second is, are Worksite products subject to COBRA? Okay, some of you think about that. And the last one, should Worksite products be offered post-tax or pre-tax? So we've got three key major pieces of regulatory compliance that can affect Worksite benefits and products. That's ERISA, COBRA, and then Section 125 plans. So briefly, under ERISA, right, if we just think about, okay, a health and welfare benefit, how do I know if my plan is actually needs to be under or subject to ERISA? So here's your basic definition, right? So an employer, all right, establishes a plan that's providing health benefits, right, or insurance benefits for reimbursement for the benefit of their employees or beneficiaries, right? So your basic definition of a employer-sponsored group health plan, right? They're creating a benefit program, a plan that is for the benefit of their employees and for their beneficiaries, and providing some type of health and welfare benefit, right? Pretty easy there from a benefit side, from an ERISA side of the equation. So, okay, so keep that in mind, right? So it's an employer sponsored. So with worksite products, there is a specific safe harbor that every employer should strive to apply, all right? So what we're trying to say is that does worksite products or benefits, do they need to comply or conform under ERISA? I mean, the answer is not necessarily, okay? However, there are going to be some specific steps or guidelines that an employer is going to want to follow in order to come under this safe harbor. So that worksite benefits would not need to comply or be subject under ERISA. So the three things are listed here, and I'm going to then emphasize the endorsement side here in the next slide. These products need to be completely voluntary, right? I would say most employers go, check, got that one. We do. We make them completely voluntary, to the employees. So that meaning no employer contributions, right? It's optional. But this last one is a little tougher, and we want to go into this. So it says under this safe harbor that employers can not endorse the plan. So what does endorsement mean, right? What is employer endorsement? And we've got several bullets here, and for sake of time, I probably can't go through every one to do it complete justice, okay? But each one of these bullets actually can imply that an employer is endorsing that worksite product. And again, if the employer is considered endorsing the product, this worksite product, it's going to fall under ERISA. So you see the bottom line there. Do your clients do any of these particular things? If yes, ERISA will apply. Now, let me just touch on some of these here. If the employer allows use of the employer cafeteria plan, so they enable an employee voluntarily to elect a worksite product and then be able to pay for that worksite product under the employer's cafeteria plan, meaning pre-tax deductions. That bullet alone, if your clients are doing any of those, ERISA applies. Okay? We'll keep going here. Some of these other areas, some of these are kind of gray, right? Well, I mean, how much is the employer involved in this, right? So this second bullet, as you read it, employers involved in the insurer's selection process. Well, clearly the employer is selecting a particular carrier to come into their employers, right? To come in and speak to their employees. That's what that's not talking about. What that is meaning in bullet number 2 there is that the employer is actually sitting down alongside that employee and assisting and supporting them through the enrollment process, meaning they're involved in selecting that various insurer, right, for the benefit of that employee. Employer doesn't want to be involved in that. Could your employers be negotiating plan terms, which could link coverage? They're literally negotiating with that particular carrier in negotiating those specific terms and then tying it into a specific employee, acting on their behalf. That would be considered endorsement. Including worksite as part of kind of including the language of their worksite products, just kind of rolling it right into the rest of the employer-sponsored group health plans, kind of making it have the appearance that they are more voluntary benefits, right, instead of worksite. That can be construed, of that. And I'm just going to skip here a couple, but employer's logo on marketing the plans. They assist employees with claims or disputes. They're segregating employee payroll withholdings from general assets. So what that means is that they have a particular carrier, a worksite product group or a group of products that deductions are being made for. And instead of that employer just kind of collecting those deductions, those elections, those premium amounts, and then, out of the general assets of the employer, but they're segregating it into a specific account, that's going to fall under ERISA requirements. So any of these areas, some are a little more gray than a pure black and white, okay? But that first one is a big one, allowing the use of employer cafeteria plan pre-tax deductions. So I want you to think about this. So choosing whether to offer pre-tax or post-tax benefits. All right, so let's cover this here real quick. So pre or post-tax, what do you do, right? So under group health and welfare benefit plan, so that's your, that's your medical, your dental, your vision, right? I mean, it's your standard, even long-term disability, short-term disability. So those group products, those, you're not going to get around it. Those are subject to ERISA, okay? It doesn't matter if you pre-tax those or post-tax those are going to fall under ERISA, meaning that they're going to need to conform under ERISA rules, requirements, distribution, disclosure, all of those. Reporting as well, if that applies. Voluntary benefits, okay? Think back to the definition, right? So these are employer-sponsored voluntary benefits like the dental and the vision, right? So that's subject to ERISA regardless, too, of whether they are offered on a pre- or post-tax basis. Okay, so voluntary benefits and the group health and welfare benefit plans, namely what you see out there is the medical, right? But it can include some of those others. Those are all going to be included and kind of follow the same rules. Now we get into worksite benefits. All right, so worksite, it's only, and I say only in talking about pre or post-tax, it's only subject to ERISA if they are offered on a pre-tax basis. All right, post-tax deductions for worksite would be exempt, all right? So one other thing to just kind of keep in mind in regard to worksite benefits as you think about pre- and post-tax types of benefits. So generally, all right, I always got to use that phrase, right? But generally, if a worksite product is paid on a post-tax basis, then the amounts received, so the benefit collected, will not be taxable, okay? So when you offer those benefits and you do so on a post-tax basis, you don't have to worry about ERISA, and you also don't have to necessarily worry about the benefit, if collected, would become taxable, okay? Now, vice versa, pre-tax. If the worksite product is paid on a pre-tax basis, then the amounts received will not be taxed to the extent that they reimburse medical care received, okay? So many worksite benefit products are tied to a specific illness, right? Critical illness or a medical condition. And as long as the benefit, even if you pre-tax it, as long as the benefit collected at the time a service is incurred or a medical condition is realized, right? And that benefit goes toward the medical care received, no issues with a taxable benefit received. However, any amounts in excess of medical care received would be taxed, okay? So if they happen to receive extra dollars, not just tied to the medical care, but they're receiving extra dollars collected, if they pre-tax the elections, the deductions, then that part of the benefit would be included as taxable, all right? So some important pieces. So the question to ask is, okay, pre or post? Now we know, so basically the answer is for worksite, you can choose, all right? But how you choose is going to impact that compliance aspect of it, right? Because if it does impact ERISA, well, guess what? If you're now going to pre-tax these worksite products, right, for the employees and include it under the Section 125 plan, well, all right, you're going to now need to add these products and update your plan documents for ERISA, right? I'm not talking about your section, well, you will update your Section 125 plan document to include it under 125, but you're also going to need to update your ERISA documents as well. You also then, when you update that, you're going to need to distribute your summary plan description to those participants and beneficiaries. Form 5500 filing and a SAR report would be necessary only if it's required, right? If they meet those thresholds and are not part of any types of exemptions, right, under ERISA filing standards and requirements. And then the various fiduciary requirements that just flow under or into ERISA, all right? So ERISA requirements from plan documentation is vital there. It has to be updated in and under your ERISA documentation. Same thing is going to be applied here as well under ERISA, right? You've got to consider, the consequences, right, of not including those under ERISA. So if found to be sponsoring an ERISA plan, you then could have additional, in an audit that could occur, these penalties could apply, right? So employer may be required to pay claims for employees if they were denied benefits for some reason, not the carrier's responsibility. And then you have the various standard ERISA penalties that can apply, under ERISA. Now, one thing that you don't have, and I didn't put a specific slide here actually, but under COBRA, right? So we just stated under worksite products, if you pre-tax the deductions, that's going to fall right under Section 125. And it's going to fall under ERISA. It's going to be subject to ERISA. But does a worksite product actually need to comply under COBRA? The answer is no, right? Because these are individual products. So it's not like your group dental or group vision, right? Those are COBRA qualified. Those are going to need to be in consideration for, the COBRA continuation rules and elections and so forth. But under worksite products, even though you may pre-tax them, they may fall under ERISA, they may fall under Section 125, but they're not now going to qualify under COBRA. All right, so a couple spotlight items that I thought tied in at least nicely to this conversation here today. And it's a little bit of a bonus topic, but it does kind of tie in. And I wanted to tie in a couple more things as we thought about there's three supplemental types of medical plans that are out there that questions arise quite often as to whether ERISA or COBRA would apply. And the first one here is an employee assistance plan, right, or program. Right? So a group EAP, okay? So generally speaking, if these plans, EAPs, do not provide medical care, they're not subject to ERISA or COBRA. So for instance, some of those examples would be, right, you're just phoning in service. So an employee calls into an EAP, hotline, and simply all that EAP is doing is providing some, specific advice or places to go for referrals, to get more help. And that might be a phone-in service for referrals, financial, retirement planning, childcare, concierge services, and it can also, be a lot of different things with therapy, but family and marital counseling and so forth, right? But as soon as that EAP specifically that provides medical services, so the plan itself, so the program itself is providing counseling, drug and alcohol assistance, stress or anxiety assistance and help, flu shots, immunizations, things of that nature. That right there will automatically, right, put it into ERISA and COBRA qualified status. Okay. Now, a lot of times EAPs are part of the medical plan. And so a lot of times right there, it's going to need to conform under ERISA and COBRA, but it's already managed that way, because it's rolled up into the medical plan. I guess we'll say it's integrated with that medical plan, right? But there are plenty of standalone EAPs. And if these EAPs provide medical services, that has created an ERISA and a COBRA qualified plan. So then that means that those specific requirements that I had listed before under ERISA and talked about even with COBRA would apply. Next, wellness programs. We are hearing a lot about wellness programs. Don't know where you sit today and how you offer it today, but wellness programs, these are growing, right? So you need to understand, well, what's its impact under ERISA and under COBRA, right? So a lot of times you're going to see these wellness programs, they're standalone, standalone programs, or they are offered by a group health plan. Okay, sorry for all those fun acronyms, right? So an employer-sponsored plan. The medical plan itself has integrated a wellness program, right? That's part of that, all right? So if the wellness program is not providing medical care, okay, you're in the clear, all right? It's not subject to ERISA or COBRA. You don't have to offer it when an employee leaves or has a qualifying event, okay? So if generally, and I just try to provide some examples, they provide health care, premium discounts. Okay, that's not medical care. That's just discounts for you participating, right, in a wellness program. Maybe it provides gym discounts, for health-related activities. Maybe they provide just resources, right, videos, pamphlets on stress, whatever those things may be. That type of a plan is not going to be subject to ERISA. We don't have complete weigh-in here yet. There's a lot of gray area, but in the gray area section, when an employer starts doing health risk assessments or weight loss types of screenings or programs, biometric screenings, smoking cessation programs, this becomes the start of a gray area where this wellness program would be delivering on medical care. So you want to be cautious there, right? And then lastly, if this wellness program is really taking it to the extreme, right? Or to really, there's a lot of various types of wellness programs, but these activity-based, right? Activity-based and results-based types of wellness programs, this is where you're going to most likely be where these wellness programs will fall under ERISA and COBRA. So if they have on-site medical clinics, annual physicals, things of that nature, where they're providing medical care, the program itself, this will result in that wellness program being subject to ERISA and COBRA. And then lastly, guys, gals, this is a good one, right? Telemedicine. All right. So you guys need to understand something, how the Department of Labor actually looks at telemedicine. The Department of Labor takes a position. This is their position, not Steve Jackson or PrimePay. The Department of Labor takes a position that all telemedicine is a group health plan. All right, which ensures that it is always subject to ERISA and COBRA. How about that statement? Right? So I make the first bullet there. Well, it's subject to ERISA and COBRA if the plan provides medical care. Now, a lot of telemedicine vendors, folks advocates for and against, right? Telemedicine, they're going to give their various opinions. Some will say that it's still gray as to what a telemedicine product or service, whether it provides medical care or not. But most of the time, if you think about it, telemedicine, right? It's providing medical care. I'm calling in to a licensed physician, right? I'm getting advice. They're giving me medication. They're prescribing things for me. They are diagnosing, right? Now, most carriers bundle or integrate telemedicine into the carrier's medical benefits, right? So if bundled, then generally your medical plan is going to be under ERISA and COBRA already. So you will have end up complying with ERISA and COBRA due to that fact. But there are standalone telemedicine services that are not necessarily bundled with the medical plan. And so if they are providing medical care, and so I just kind of write an example of what that means again. You have access to licensed health professionals by phone, chat. That's every telemedicine service that I know of. And it provides a medical diagnosis, which most of them do, then it is providing medical care. And so you're going to want to make sure that you're complying under ERISA standards and requirements and COBRA just with telemedicine. So it's not just as simple, right? Voluntary benefits, worksite benefits. I mean, there's some of these compliance issues that you really need to take full-on consideration of. But I hope today that I was able to drive some specific value to you so that you could better converse or communicate these specific obligations that can occur as more and more of your employers adopt these voluntary, but also these worksite benefit plans. These are only going to gain more and more into popularity, right? They're going to be greater adoption than ever before. If not, right, you are missing the boat. We do not sell any of that here. We have great partners that do, but it is imperative if basically 100%, right, showing you in that survey, almost 100% of employers get it. They need to drive a more competitive benefit program. Well, guess what? Employers are going to need to utilize and capitalize on more of the worksite and voluntary benefit programs and products. So, thank you for attending today. We've got some great follow-up here that we're going to give you. For all of you attending, we are providing a recording of the webinar here today. Again, we do post those directly on our Broker Concierge YouTube channel. If you subscribe to that, you'll instantly get a message telling you when that is uploaded. But that will be done here in a matter of a couple of days. For our Broker Concierge partners, we have something special for you. We have a matrix that covers all of these products in nice detail, and it explains to you how ERISA, COBRA, 125, whether you can pre-tax, post-tax. It's a matrix that actually informs you how which applies to what. If you pre-tax worksite, you post-tax, what does that mean as far as ERISA? So almost a cheat sheet of sorts, right? So if you're a Broker Concierge partner, you're going to enjoy that specific sheet there that we're going to give you. If you're not a Broker Concierge partner, I'd love for you to connect with our team. Learn a little bit more about how we're handling, how we are partnering with brokers like you in supporting your efforts in the field to better address these complex needs with your employer clients, with their employees, but also helping you retain and attract groups like ever before to help neutralize competitive threats that are ultimately out there, but also to help drive new revenue streams for your agency. So please reach out to us at one of those touch points there on the screen. We'd love to hear from you, but reach out today. For those who have typed a question, and we have several, we will get back to you here directly after the webinar today, and we will answer your questions there. So with that, that will conclude our webinar. We want to wish you a great day and a great start to the summer. And enjoy it, and we look forward to having you join our webinar next month. Take care.